Welcome to the Deep Dive. Today we're digging into Orion Oyj's Q3 2025 earnings call. Now this one caused a bit of a stir, didn't it? Shares dropped, I think, 6.6% on the day.
Yeah, quite a sharp reaction. And honestly, it looks like a classic case of the market reacting to the headlines, maybe missing the real story underneath.
Okay, so that's our mission today. Figure out if that drop was justified or if there's a disconnect between the optics and the operational reality.
Absolutely, because the headlines looked pretty rough, but the actual momentum seems pretty strong. Understanding that gap is key for you listening.
Right, so let's start with those headlines, the numbers that likely spooked people. What hit the wire first?
Well, first off, there was a slight miss on revenue. Reported came in at $423.2 million.
And consensus was, what? A bit higher? Around 428 to 430 million, something like that.
Exactly, just a little shy of expectations there.
Okay, a small miss. But then came the profit numbers, and that's where it got more dramatic.
That's right. Reported GAAP EPS was 0.68. Now compare that to 1.142 last year. Big drop.
Yeah, that's significant. And the operating profit, EBIT.
That was $121.0 million. And here's the kicker. That's down 40.1% compared to Q3 last year.
Wow, okay. A 40% year-over-year decline in reported operating profit. You can see why the market might react negatively just glancing at that.
Absolutely. If you're just scanning headlines, that looks like a major red flag. Sell first, ask questions later, right?
But there has to be a reason for such a huge mechanical drop, right? It can't all be operational decline.
And there is. This is where we really need to dig in. The comparison quarter, Q3 2024, was exceptional, not normal at all.
How so?
It included $130 million in non-recurring milestones, one-offs.
$130 million, that's huge. That's almost a third of this quarter's total reported revenue.
Exactly. It completely skews the comparison. Think of it like getting a massive bonus one year and then comparing your income the next year without it.
Okay, what were those milestones specifically?
It was $70 million tied to Nubeqa sales targets being hit, and another $60 million related to the obese start agreement they have with MSD.
Right, so take $130 million in basically non-operational income out of last year's Q3.
And suddenly that 40% decline makes perfect sense mechanically. The market was essentially punishing Orion for, not getting the same giant bonus payment 2 years running.
Okay, so that explains the ugly comparison. Now let's flip the coin. What was the operational reality? If we adjust for those one-offs, what does the business actually look like? This is the important part.
This is where the story completely changes. If you look at the base business net sales, so their actual core sales without those milestones growth was up 24% year over year.
24%. Okay, that's a very different picture. That's really strong growth for a pharma company this size.
Phenomenal growth, really. And that base business is the full $423.2 million reported revenue this quarter.
Hang on, quick question though. If base business grew 24%, how did they still miss the consensus revenues slightly? Were analysts expecting even more base growth?
That's a fair question. It suggests analysts might have been a bit too optimistic on the core acceleration, or perhaps some were still factoring in a chance of an early milestone payment, even a small one. Hard to know exactly.
Okay, but the underlying profitability story backs up that strong base growth.
Oh, absolutely. Strip out those same milestone distortions from the comparison period, and the underlying operating profit, the EBIT from the actual operations, surged 68.1% year over year.
Wow. Okay, so 24% base sales growth, 68% underlying EBIT growth. That's impressive.
Right. Optically weak because of the comps, but structurally it seems like things were, firing on all cylinders.
He backed up by cash flow too, I saw.
Yep. Solid cash generation. Cash flow from operations per share was healthy at 0.55.
Okay, so let's break down where that 24% base growth is coming from.
Yeah.
What did management say about the divisions? CEO Lisa Hermes' comments.
She highlighted a few key areas. Innovative medicines is still the main engine, largely thanks to Nubeqa.
The beer partnership, right?
Yeah, exactly. They hit all-time high royalties and product deliveries for Nubeqa in Q3, and the recent EU approval for Nubeqa in that MHSPC indication. Metastatic hormone-sensitive prostate cancer. That just adds to the long-term story there.
Makes sense. Oncology royalty engine kicking into gear.
But here's a really crucial detail, especially for anyone modeling Q4. Remember last year, Q4 2024 saw a big sequential jump in Nubeqa royalties.
Vaguely, yeah. Why was that?
Because the royalty rate itself stepped up during Q4 last year, hitting a higher tier based on annual sales volume.
Ah, okay, so it's different this year.
Management confirmed they actually hit the maximum contractual royalty rate during Q3 of this year, 2025.
Oh, Okay, so that rate step-up mechanism is already done for the year.
Precisely. It's great news for the current run rate, but it means you can't model that same big sequential jump from Q3 to Q4 this year based on a rate increase.
Right, so for you listening, that's critical. Q4 2025 Nubeqa royalty growth will be driven purely by volume increases, not by another jump in the percentage rate like we saw last year.
Got it. Super important nuance. Okay, moving on. Generics and consumer health had, and I quote management here, a very, very strong quarter, up 5.4%.
That's pretty good for generics, especially since some older products like Simdex and Dexter are probably facing erosion, right?
They are. So that 5.4% growth shows really good execution. Management pointed to two things. Strong product availability, especially in the Nordics, which is key in generic.
That had an advantage, yeah.
And successful new launches, like apixaban in Finland. They're managing to offset the declines and still grow the top line. Very solid.
Okay, what about the other areas? Branded products and animal health?
That was described as somewhat slow. Only 3% growth in Q3.
Why the slowdown there?
Management put it down to temporary delivery timing issues, specifically getting products like Stalevo out to partners.
Okay, temporary delivery timing. That always makes me a little nervous. Is that credible?
Well, they did say they expect it to be sorted out by year-end, and if you look at the first 9 months combined, that segment is still up 9%, which sounds healthier.
Right, the 9-month number gives some comfort. But definitely something to watch in Q4 to make sure it was truly just timing.
Agreed. If that excuse pops up again, then you start to question things.
Did they call out any other specific product drivers for the overall base growth?
Yeah, besides Nubeqa, which is obviously huge, growing 84%.
Incredible.
They highlighted their HRT product, Davina, growing nearly 23%, and the Easyhaler respiratory portfolio, that was up close to 8%. So good contributions beyond just Nubeqa.
Nice bit of diversification there, supporting the core. Okay, let's shift to guidance and strategy. Did they update the outlook for the full year?
They did. They narrowed the ranges, which usually signals increased confidence or visibility.
Okay, what are the new numbers?
Net sales guidance tightened slightly to €1,640, 1,720 million. That was from €1,630, 1,720 previously.
Minor tweak.
And operating profit.
That narrowed too, now €410, 490 million, compared to 500 million before. So slightly raised floor, slightly lowered ceiling, centering expectations. And crucially, what about that big potential milestone? The 180 million one for Nubeqa. Is that in the guidance now?
No, still explicitly excluded. Management repeated their stance. While it's possible they could receive it before year-end 2025, their base plan, their guidance, assumes it lands in 2026.
So that remains a massive potential upside catalyst hanging out there, completely outside the current guided numbers.
Exactly. Huge potential swing factor for next year, or maybe even very late this year.
Now, tied to strategy, R&D spend was up significantly, right?
Yeah, up about 35.8% year over year in Q3. And there's a clear shift in focus.
How so?
They formally discontinued the ODM-105 insomnia program. Phase 2 didn't hit the efficacy target.
Okay, cutting losses there. Where's that R&D money going instead?
It's become, as they said, clearly oncology focused. They're gearing up to start a Phase 2 trial for their internal oncology candidate, ODM-212, in the first half of next year. That targets solid tumors.
Internal pipeline development, good to see. Anything else?
They also mentioned aiming to get at least one biologic asset into the clinic next year. So pushing into biologics alongside small molecules in oncology.
Okay, strategic pivot makes sense given the Nubeqa success, but what's the timeline for these new internal drugs actually contributing to sales?
That's the catch. Management was clear. They don't expect sales contribution from things like ODM-212 until the early 2030s.
The early 2030s. Wow. Okay, so that increased R&D spend is a very long-term investment.
It absolutely is. It creates this decade-long sort of R&D bridge that investors need to be comfortable with. They need Nubeqa royalties to stay strong for a long time while these new bets hopefully mature.
That's a key risk there. If Nubeqa peaks before these internal assets are ready, there could be a gap.
Precisely. Execution on this new pipeline is now critical. Or they might need M&A or in-licensing down the line to fill that potential hole. High stakes.
What about updates on assets partnered with others, like the MSD program, Upstrata DM208?
Yeah, a quick update there. MSD changed the primary endpoints for the two big Omaha studies. Omaha 3, which is later-line prostate cancer, now has overall survival as the primary endpoint.
Okay. And Omaha 4?
That's frontline, and the primary endpoint is now progression-free survival. Importantly, the readout timing for both is still expected in 2028. So, endpoint tweaks, but timeline unchanged for now.
Got it. Before we get to the trade idea, any other context worth mentioning? Pricing pressure, maybe?
Yeah, they were asked about U.S. pricing for Nubeqa, since Bayer handles that. Management deflected a bit, understandably, saying they can't comment on Bayer's specifics.
But they watch the general environment.
Right. They mentioned monitoring the political atmosphere,
Correct.
including things like the Most Favored Nation initiative, which could theoretically pressure U.S. prices down towards international levels. Just general awareness of potential headwinds.
And one last thing on Nubeqa, the impact of that recent MHSPC indication launch.
Interesting point. Management said while it's driving linear growth, it didn't cause a sudden, massive step change in volumes.
Why not?
Their theory was that there was likely already significant off-label use in that patient group before the official approval, so the approval validated practice rather than opening a brand new floodgate. Predictable growth, not explosive.
Makes sense. Ties back to that theme of solid, underlying growth, but maybe not the fireworks some hoped for immediately.
Exactly. Steady wins the race, perhaps.
Okay, that sets the stage perfectly for our This Is Not Financial Advice segment. Given this backdrop, solid underlying growth, masked by comps, plus this big uncertain milestone timing, what's an outrageous but plausible trade idea here?
Well, the stock clearly got hit because of that headline noise, and crucially, the uncertainty around the timing of that $180 million milestone payment not being baked into guidance.
Right, so the trade should focus on that timing uncertainty.
Exactly. It sets up a directional play purely on when or if that catalyst hits relative to market expectations. Management is guiding for 2026, remember?
Okay, lay it out for us.
You could structure a kind of volatility or timing play. Since the market isn't really expecting the milestone in Q4 2025 based on guidance, you could consider shorting some out-of-the-money call options that expire at the end of Q4.
The thesis being?
The thesis being, if management is right and the announcement doesn't happen in Q4, the stock might just drift, maybe even slightly lower, and those Q4 calls could expire worthless. You collect the premium.
Okay, that's the what if it doesn't hit soon part?
Yeah.
What about the what if it does hit just a bit later?
Right. To capture the potential upside, you'd simultaneously take a position in, say, at-the-money call options that expire later, maybe in Q1 2026.
Ah, I see. So if the milestone does get announced early in 2026, as management suggests is plausible.
Then those Q1 calls are positioned to capture that sudden, potentially massive upside jump that the market is currently ignoring because it's not in the guidance. It's a gamble on management's timeline being roughly accurate.
Interesting structure, playing the timing variance. Okay, let's wrap up this deep dive. Orion Oyj's Q3 2025. The headline numbers look rough due to tough one-off comparisons from last year.
But underneath, the base business showed really strong momentum, 24% sales growth, almost 70% underlying profit growth. The story is shifting towards that durable Nubeqa royalty stream plus the rest of the portfolio.
Solid performance hidden by noise.
Exactly, but that brings us to the final thought for you, the listener, to mull over.
Go on.
Given that big 36% jump in R&D spending and the clear strategic pivot to oncology with ODM-212 and biologics, but knowing those internal assets won't likely contribute sales until the early 2030s, the question is, how quickly and effectively does Orion need to execute on this new pipeline? How much pressure is there to deliver results from that internal R&D before the Nubeqa tailwind potentially starts to fade later this decade? That R&D bridge is long.
That is the multi-billion-euro question, isn't it? Balancing today's strength with tomorrow's pipeline needs. A lot for investors to watch. All right, that concludes our deep dive into the Orion Oyj earnings call. As always, remember, we're just dissecting the information presented. This isn't financial advice. Thanks for joining us.
We'll catch you on the next deep dive.